Morning, everybody. It's Brian. Hope you're doing well today. It's the 19th of August, Wednesday. So just here for a really quick morning update. We're going to walk through what we're looking at in the forex side of things, then pop over to futures, look at some potential trade ideas there, talk about strategy, and if anything else pops into this crazy brain of mine, I'll share those thoughts. Usually something around having a plan and sticking to your plan. I mean, that's what it all comes down to. I keep saying there's no secret sauce. It's all about having a trading plan that gives you a little bit of an edge, executing that over and over and over, having the mental fortitude to stick to it when things maybe aren't, quote, going to plan. And typically for traders, going to plan means you had a losing trade. But we'll get through all that. Let's start off by having a look at the news calendar. I remember I've always mentioned before, we want to know, I don't look at the news calendar so much to figure out when I'm going to place trades around news, right? I don't want to trade in the news. I want to know when news is occurring so that I can make adjustments if needed. Adjustments meaning either A, not entering a new trade because news is happening right now and I don't want to get caught up in the chop around that news event. Or B, if I'm in a trade and there's news coming up, I want to understand what the news is and the potential impact of that news so that I can either A, exit the trade and wait for news to occur and come back in, or if I've got a pretty good profit in place, maybe I just simply want to tighten up stops a little bit or manage that trade in some way so that I can lock in profit in the event that the news is something that ultimately changes the direction of, or is that, I shouldn't say the news isn't going to change it, but is a catalyst for a change in the direction of the overall market trend. So anyway, what's going on today? Well, we've got OPEC meetings happening through the day. Crude oil inventories are coming up at 9:30, and then FOMC meeting minutes at 1. So which of these will really impact our markets overall? Probably the one that has the biggest potential impact would be FOMC meeting minutes, but even that I don't think there's going to be much coming out of that that's really truly market impactful. I think the big things still are items that we've talked about before that could have a larger impact, which is some left field news about a vaccine for COVID, or some new drastic policy that comes out around that, as we start seeing cases reappearing or spikes happening again, that I think will have a greater potential impact than the planned news that's coming up today. And those are things that you really can't plan for because they're unknowns. They're things that could just happen at a blink, and we don't know when that's going to occur. Which is why they're so important to have a dang trading plan, right? As I mentioned before, right now we've got the focus of our news. We've got the election coming up. We've got the COVID news. We've got potential resolution of a relief bill. We've got all these little things that are stacking up. There was something else that was in my head and just kind of floated out just now. But there's lots of little things that are out there. But there's always something out there. And right now we're looking at what happens, what's happening with these things, and we're like, oh my God, the sky's falling. These things are happening. This is such a big, market driver, yada yada yada. And it has been. It definitely has been. Some news has greater immediate impacts than others, but there's always something. There's always something that can come out of left field and happen in the market, which is why it's so important to have a plan. And have a plan that you can follow and stick to. Anyway, I'm not going to harp on that today. Let's just go in. We'll get the excuse me. We'll get the numbers of what we're looking at, what we're looking for, and then we'll get out of here. And then you guys can go trade. And if we have trading opportunities that we need to review, I'll record a video at the end of the day. Just a moment. I don't know how to mute myself on this. All right, I think I'm good. So anyway, let's jump into it. So what are we looking at in Forex? Well, to begin with, let's pop over here, and hopefully you can all see that. What we're watching for here is we're trying to see, now that the U.S. foreign exchange session has started, we're looking at which currencies are actually moving, which ones are showing some strength, which ones are showing some weakness. And coming into the new session, we've got the pound. The pound's been a weak currency leading up to the start of the U.S. session. So really, we want to look at things that are pound, pound cross pairs. So what can we pair against the pound or pair with the pound that might be a tradable opportunity for us? And with that said, once we have a look at that, we'd want to see how things are shaping up as far as what's the opportunity that's left in the marketplace. So like one right now, if we look over here, we've got the pound potentially versus the CAD. The CAD's been flat, just flatlining here, but starting to push to strength a little bit. So we're starting to show some strength on the CAD. So we've got the pound as a weak currency and the CAD as a stronger currency here above the midpoint. We've also got the yen as a stronger currency that's here above the midpoint. Looking at both of those over here on our charts, though, we look at the pound CAD and we can go, well, that's pretty interesting. It's been in a downward trend, for the day so far. It's pushing down. As we open this new session, we've certainly got opportunity to maybe break through our breakout box here and look for continued down momentum. The volume detail certainly is favoring the sell side. It's indicating that the way volume is flowing in indicates that we'd see potentially see continued selling. So looking at this pound over here moving to weakness, CAD moving to strength, and looking at our breakout box, we're about to break through the bottom of this box. And with that, we've got the volume detail here indicating that we could still be selling that. That looks pretty good. Looking up here at our current range, we've moved 91 pips for the day. Our average range on this pairing, it's pretty volatile. It's a pretty volatile pair, is 120 to 130 pips. So, does this have the opportunity to break through here and move another 20 pips? Yeah, that's still within its typical range and could maybe even move further than that. We'll see. But it's certainly within its typical range, and that's encouraging. So that all lines up. You weigh that against the pound versus the yen, which is the other currency that we're seeing here, the other potential pairing against the pound. We've got the yen that's been pushing to strength as well. So it's a stronger currency to pair against the pound. So trying to choose between the two, we're left with a choice. Do I look at the pound yen or do I look at the pound CAD? Well, I go here and I go, okay, great. Well, let's see what the pound yen is doing. Well, if we look at the pound versus the yen, we would expect to see the same pattern because the pound is a weaker currency. So we'd expect to see the pound selling off, and it has been coming into the new session. Right before the session started, we saw the yen back here did push back towards the midpoint, so it weakened a bit against the pound, and that's represented here as we see that spike. However, overall, the trend is down, and if this rolls over, especially as we get down to near the bottom of this breakout box, more than likely we'd see the volume detail roll over as well, indicating that maybe we'd continue selling that. But right now, the volume detail doesn't favor the continued selling just yet. The other thing that stands out to me in looking at the pound yen currency pairing is today we've already moved 107 pips, and its typical range is 99 to 106.7. So we've already moved as much as that typical range is. So, which one do we really have the opportunity in? It looks like the pound CAD has a little more opportunity than the pound yen does. Both are currencies that have been fairly flat and are moving to strength. Especially when we look at it against the pound, but one has moved, a smaller fraction a fraction of its typical day, whereas one has moved 100% plus of its typical day. So, I would favor the pound CAD over the pound yen in this case, just because everything simply lines up. So that's what we'd be looking for here this morning on the forex side of things. That's what we always look for, whether you're trading it on a breakout or you're trading it just later into the day, looking to scalp and grab a few pips as a trade begins to move. We're always looking for that same dynamic, and that's the process that we go through. So I think that's all we need to talk about there. So let's move over now and have a look at what's happening in the futures market. So in the futures market, we'll look at S&P, crude, and gold. And what we're seeing over here is the S&P 4-hour bias is long. 30-minute bias is still long. Yesterday we did push into new highs. We didn't, I really kind of expected that we once we cracked and closed above 33.80 that we'd see a little more of a rapid move up towards 3,400, but it hasn't quite had the momentum I thought it would have behind it. But again, that's why we don't trade our opinions. We trade something that's quantifiable, that we can measure on the charts and gives us definitive reasons for doing what we're doing. Either way, as we saw yesterday in looking at the the recap of the indicator, it did find those entries just fine. So what are we looking at for the day? Remember, we're up here in kind of uncharted territory as far as where our resistance points are. We know we've got a support level, which I haven't painted on here yet, which is at 33.80. 33.80 is major resistance for us. We'd hit it and back off, hit it and back off, hit it and back off. And coming right back down to our support level at the time, which was this 33.60. So now we've got 33.80. We've broken, we've closed above it. 33.80 is our new support level for us. So looking at long trading opportunities, because the 4-hour bias is long and the 30-minute bias is long, we've got a few things that we consider. I would prefer to get things a little cheaper rather than at this point trying to play a breakout, looking for 3,400. I'd like to see if it floated back, to 33.80, 33.75. That would be our buy opportunity over here, simply because we're coming back to a level that was, as we've mentioned before, think of it like a ceiling. You're on a trampoline, and you're the trampoline on your floor, and you're bouncing higher, and you get to the ceiling and you hit your head. Boom, you hit your head. And then you come back down to the trampoline, you go back up, boom, you hit your head. And the more times you're hitting your head, you're kind of weakening that ceiling. The more it's retesting and testing that resistance area, you're weakening that level. And then finally we hit it and we break through that ceiling, and then we spread our legs apart real quick, and that becomes the floor, right? That's what we're looking at here on this S&P chart. So 33.80 would be that floor. It'd be that spot that we'd now look for if we floated back down here to bounce off of and potentially go higher. So 33.80 would be that potential entry point for us. Of course, the other way to trade it is what we've been discussing for months now, which is if we've got an upward trend, and that's a trend confirmed on the 4-hour and the 30-minute, so our bias is to the long side. What we'd be doing is just simply waiting for, under regular trading hours, waiting for price to make lower highs and lower lows, and closing. So we've got a candle that's made a lower high and a lower low, lower high, lower low. We're going to simply put our stop or our stop entry at the top of that closed out lower high, and our stop loss, our risk point, at the bottom of that candle with the new lower low, and then wait for it to break through there. So those are two ways to potentially be trading that S&P. Could either be looking for a bounce here, or like I said, the other trade where we're looking for the pullback or the breakout. Over here on crude is now at a mixed bias again. Our 4-hour bias is long, but the 30-minute bias is short. So when we get a mixed bias, what do? We sit on our hands. Also, we've got OPEC all day, and we've got some news coming up here in a bit that could be impactful. So maybe a good day to sit on your hands until we get some direction around what's happening with crude. So we're sitting on our hands there. In gold, our 4-hour bias is long. Our 30-minute bias right now technically is still long until this crosses over. So if we're staying down here below 2,000, this 1995 area, this especially if it closes below here, our 30-minute bias our short-term moving average may cross below our longer-term moving average here, giving us that definitive indication that we have a mixed bias. Until that happens, especially if this pushes back up around 2,000, we're still technically right now in a long bias on gold. You guys have heard me talk for a while. I have a hard time wanting to sell gold. A little bit of a gold bug, I guess you'd call it, with that. So I'd still be looking for long trading opportunities. And what we could be looking for here would be a break of 2,000. So if we break above 2,000, that'd be an entry point on a breakout trade. Pullbacks, pull back to 1990, 1985 here would be a pullback area. I mean, 1990 is pretty well supported. You know, it would be a pullback area if we can get in a little bit lower and then look for that long side. If it closes low though, if we get this, you know, candle close and our moving average does cross over, that would be a mixed bias. Technically, at that point, the biases are mixed and our 30-minute does not agree with our 4-hour, and we tie ourselves up, whatever we have to do, shut that chart off and just simply wait for a confirmed bias in order to go back into trading. So that's what we've got for the morning. I'll leave it here for you and let you guys get on with your trading day. There's some ideas, things to watch, things to look for, and some potential trade ideas for you this morning. Obviously, what I'm watching on an intraday basis is based on the indicator that we've been talking about now for a while, which is based on the trading strategy that we've been talking about for months now. And that's just simply if we've got a long bias, we're waiting for price on that 30-minute to make lower highs and lower lows, and then we're trailing our stop under regular market hours, right? We're trailing our stop at the top of that previously closed lower high. I say stop, our entry point at the top of that lower high, and then a stop loss at the bottom of that newly formed candle, right? That newly closed candle at the lower low down there, and then waiting for the breakout to go from there. And if it doesn't trigger, you know, you go to the next one, you go to the next one, you go to the next one. And you want to do that during certain hours. You can't just simply leave it all day trailing that down. I mean, have the hours that you're trading. I trade the first couple hours, and that's it. So that's what we'll be watching on the other side. So if a trade does key in based on those criteria, then we'll discuss that later today. All right, so that's it. Have a great day. We'll talk to you soon. Bye.